Recently there was an talk, and I was listening to a talk on the TV, and many people, and also discussing with a few investment managers, and they were talking about rate cuts. They were talking about whether there will be the you know, uh, basis points cut, 5% basis point cut in the rate by the Reserve Bank of India. Now, when a rate cut happens, it means that more money is going to flood into the market because that amount of money is available with the bank to lend and supply. Now, which means that as more funding is made available, that money can be spent on so many things other than investments. They can go, people can splurge on holidays, people can splurge on, purchase of things, and people will be willing to pay more for a particular activity than what it is valued at because they have the money. For example, what would have been available if really made available for 40 rupees, they'll be willing to pay 60 rupees for it because they have the money to spend. Now, is that a good concept which we should look at? Something which we should all apply our mind on. And if we look at one more step, which we look at it, that credit cards, credit card swiping has become a big activity in India. It is growing up so fast, but delinquency is equally rising. And many big companies are losing interest in credit cards. Many of them are going for debit cards. Now, debit cards are, the difference is that if you don't have money, you don't get paid. Whereas credit cards are where you have an indirect funding is made available to you without any security. It is based on your earning capacity, your possibility of your future earning capacity, based on your past history. The company is willing to, every bank is willing to give you a credit card. Now, what happens? Some of the limits are enormous. You have a platinum card, you have a black card, you have a black platinum card, you have unlimited card. So when you have those facilities, you don't look at, you spend it currently for your entertainment or for any other purpose which you would like to. And you accumulate a lot of debt. Now that debt is good for the bankers because that means they are expecting a cash flow on that. Now, that is a liability for the bank. That is an asset for the bank that they are going to receive it. But equal amount of liability that if anything goes delinquent, they are going to feel responsible. That is where SLR, which I was talking about earlier, comes into operation. If the companies, there is a delinquency in a payment of a credit card, that means to that extent, the bank has lost its funds. Okay, filing a case, filing anything, taking care of assets, all that is a compulsory purpose. We know what happened to Nirav Modi. After 10 years, we are still fighting the case. We are looking at Malaya. We are still fighting a case of secured debts. What about unsecured debts like credit cards? There's not enough money. And what happens to a bank which is not able to collect its debts? To that extent, it's a liability written off by the bank. It's an NPA, as we call it. That means it is not written off. It is provided for, saying that to that extent, there is a risk for me and I will not be able to recover that debt. And then the discussion goes on, about other the accounting activities. I'm not talking about accounting. I'm talking about the principle. I'm talking about the per se that amount of money may not be made available to the bank in the future. So that delinquency is a cost to the bank. It goes to increase the cost to the bank of services. So, and it is not a one-time affair. Since credit cards are a revolving matter, and every day 10 persons are added and 2 persons become delinquent, I do not know what is the percentage of delinquency. When 2% become delinquency and 10% are added, there is a multiplicity of activities taking place. That is, the cards are issued and something becomes delinquent over a period of 6 months or 1 year. What is the percentage is very necessary for the bankers to analyze it, and they do analyze it, and based on which they make a provision in the banker's account known as the NPA, as I already told you. That's what is known as a non-performing asset. That's an asset, non-performing, they make a provision. Now, this is a continuing affair. Now, at some time, it may reach a pace at which we will not be able to recover if there's too much of debt is available in the market. Too much of debt, just like the US is now suffering from too much of debt. They are talking about 40 trillion. I'm not talking about 40 trillion. I'm talking even 100 billion is a big amount for India. Why 100 billion? 10 billion the rupees for a bank is a very big amount. For a small bank like, say, even Bank of India, if a 20 billion rupee hit will be too much for him to bear it. They'll go broke. What I'm trying to say, I'm not identifying any bank. What I'm trying to say is, banks are very careful. Bank leaders at the highest level, they monitor their funds very, very carefully, because we are not that developed. So when we are having a debt with regard to the credit cards, and the government, the country is flush with funds because of the FM increasing the slab and making the money availability to the people by increasing the level of exemption to 12 lakhs and with certain adjustments up to 15 lakhs. That means to the extent of those people who were paying taxes to the extent of 12 lakhs, or to the extent of 10 lakhs, they've gone with 12 lakhs, and that amount of money is now circulating in the market. That means that those funds are now flown into the market. And again, you are willing to make a rate cut, and again that amount of funds is available to the market. That means that the liquidity sloshing in the market will be so huge, I do not know whether our economy will be able to absorb that type of liquidity. Our markets are not so mature with regard to our AMCs, or regard to our mutual fund, with regard to our bond market. We don't have that kind of fluidity or flexibility which is available in the international market. And therefore, cutting rates at this stage may not be more appropriate. I think it will be advisable to wait for the budget and wait for our what will be the collection, what will be a deficit, and what will be the budget deficit, what will be a revenue deficit. All these aspects, because we are running close to maintain our economy and putting it on a stronger footing. We are setting up funds, PLI funds we have. Then we have now an R&D fund. We are still funding the rations to the poorer sections of the nation. We are spending money on elections. So much of activities is happening, and the government is cannot be flush provided activity with regard to flush of funds, and something happens to the economy. We should be extremely careful when we perceive that area. And I'm sure the managers, the bank managers and the investment bankers, though they will be interested in having more money with them to lend, they will be careful, because as I told you already, we are having a flush of funds because of the decrease in slab rate of the income tax, and with a lot of credit cards issued over a period of years in these past years, because the salaries have gone up, our economy is growing, we are having more money in our hands. So much of things is taking place. So, but inflation is under total control. Earlier we were suffering from inflation. Today the government is able to control its inflation. And if we lose the control of inflation and we lose our target inflation rate, then we'll be going back down as a tailspin. We'll go into a tailspin, which we can't afford to today, because the world economy is now in a churn because of the Ukraine war. The world economy is in a churn. And therefore, unless we know we are in a stable platform, we are running very smoothly on the tracks, the government is stable, the economy is stable, the world is looking at India. I think we should not rock the boat now. Let us wait for the results of the 31st, what happens in 31st March. Based on the result of the third quarter of the 31st December, I'm sure we can look at whether we can have a cut in the base rate audit. Thank you very much.